ARK Invest joining Thrive Capital, SoftBank, Altimeter, Tiger Global, and others participating in OpenAI's latest funding round, raising $6.6 billion. That was raised at $157 billion valuation. Joining us in a First on CNBC interview, Cathie Wood, CEO and CIO of ARK Invest. OpenAI is now the third largest position in the ARK Venture Fund. Cathie, it's great to have you on. Welcome.
Thank you, Morgan. Happy to be here. Happy to see you.
So I want to start right there because this was a record fundraising round. We know there was a lot attached to this fundraising round, including a promise of a conversion to a for-profit entity. Why did you feel it was compelling to invest now and at this valuation?
Well, we've been doing work on AI for 10 years, and we've been waiting for the companies that were really that NVIDIA was going to hand the baton to. Not that NVIDIA's story is over at all, but as you know, NVIDIA has basically been communicating, and investors have been buying a very big idea. And for NVIDIA to continue to work, we think there are going to be other winners. We think that the foundation model players are going to be very big winners, $15 to $20 trillion in market cap in the next 5 to 10 years. We put out a piece in our Sunday newsletter you can find on ark-invest.com, and we're going to put out a lot more on this. So OpenAI leading the charge, really, Anthropic, XAI, so Elon Musk and team, and even Elon, I think, is saying those three, and Google with Gemini are the big four. And, you know, unlike the railroad era, and many people are comparing this to the railroad era, I think that the four winners are showing themselves very quickly. Whereas in the railroad era, which, by the way, accounted for 63% of the stock market in its heyday in the early 1900s, unlike the railroads, there were hundreds. I think there were hundreds. We can focus on the big winners. This space is moving so quickly and is going to become so big because it's effectively substituting software for labor. Not that this is going to kill jobs at all. It's going to make people much more productive, and they're already seeing it with ChatGPT just as a starter.
And of course, the four companies you just mentioned are all companies that you are invested in through your funds. I mean, you mentioned XAI. It's been interesting because Elon Musk, co-founder of OpenAI, has been very vocal, very critical of where OpenAI is headed and the direction in which Sam Altman is taking it. Do you disagree?
I think what he's talking about is more about the history of the company, and we're looking at the future. And I was happy to hear that he did mention, of course, OpenAI as one of the leaders. Of course it is. So, you know, we're just looking to the future. I know there's a history there, and, you know, what's done is done. And we're just looking forward, trying to figure out who are going to be the big winners in this space.
Cathie, I want to look back at the Innovation Fund for a moment. Over some periods of time, see the S&P is up 34% over a year, beating ARK Innovation by 14 points, 94% over 5 years, beating that fund by 84 points, 191% over 10 years. That's for the S&P, beating the Innovation Fund by 64 points pretty much since inception. What do you say to investors who look at that performance and doubt that you're making the right calls?
Yes, I would say, first of all, our compound annual rate of return since inception has been nearly 10%. We went through a boom in 2020 during COVID, where we were up 360%. And we had valuation and interest rates and concentration in the markets working against us. We are a diversified exposure to innovation, truly disruptive innovation. I would focus people on the fact, and looking at your chart there, that if you take away that boom and bust, what we have now is three forces working for us and a long base. Again, you take away, you can say we have a base after that period. You can look since 2018, we've been basing. And I remember saying this with Tesla at the time. The longer the base, the bigger the breakout. And we certainly were right there. The three forces that I think are going to become tailwinds now, they have been headwinds. Interest rates, they're coming down. And I think despite what we saw in the employment report today, I do think that they will come down more than people think during the months ahead. The second is the concentration in the market towards the Mag 6. That is starting to dissipate. And I think that will work in our favor. And then the third is valuation. During August, when the market got hit, our valuation, as measured by enterprise value to EBITDA, dropped to nearly a market multiple. We were basically sitting on a market multiple at 21 times EBITDA, enterprise value relative to EBITDA. Now, we do adjust it for stock-based compensation, which is really important when it comes to innovation, alignment with shareholders, as well as normalize R&D. But that valuation typically is twice the market's. And we hit the market. So now I'm looking at what were headwinds turning around and becoming tailwinds, and a very long base to break out of.
Can you give us your thesis on AI refreshed now? Because you were right to be focused on AI, but you sold NVIDIA before a monster run. It kind of could have been your Tesla, I imagine, of the AI thesis. So how much hardware, how much software, where do platform versus applications fit in here? Because it looks like you sold NVIDIA starting maybe a little less than a couple years ago now. Correct me where I'm wrong there, and bought software.
Yes. So we didn't sell NVIDIA across the board. We kept it in our more specialized, focused funds like autonomous technology and robotics, next generation internet. So ARKQ, ARKW, they have held it. It has not been in the top 10. We have been looking for the software players, the Palantirs, UiPaths, and so forth. OpenAI, a lot of them are in the private sector, and we're really happy to have a venture fund now, so that we can participate there. So we believe that the tech stack around AI is going to change somewhat. We believe that the software as a service part of the tech stack, which represents 40% of it, will diminish. It won't go down. The whole space is going to be growing very rapidly. But in terms of share shift, you'll see more shifting down to platform as a service and infrastructure as a service. And the reason for that is because we're not going to have to rely on one-size-fits-all software as a service. Now that engineers are becoming so much more productive, developers so much more productive, we believe they will, inside enterprises, be using these incredibly productive tools to customize this software for their own company. So we do think there's going to be a shift among the categories, but the whole space, we think, is going to grow very rapidly.
And of course, you did just mention the venture fund. Your largest holding there is SpaceX, which we can talk about how fast OpenAI is growing, but SpaceX is still the most highly valued private U.S. company as well right now. And then, of course, Tesla with AI. You've got the Robotaxi event next week. I mean, just looking at these two companies, is there one you're more excited about right now? Which one holds more promise?
Which one? You mean, are you talking about SpaceX, OpenAI?
SpaceX and Tesla.
Oh, SpaceX and Tesla. Well, we are excited about both of them. Tesla in our public funds is the largest position in our flagship and in our autonomous technology and robotics fund. So we're extremely excited about it because this Robotaxi event, we believe, will be an important reason for analysts to think very carefully about what autonomous mobility is all about and how importantly placed Tesla is. Tesla's in the pole position, and if you look at these AI opportunities, we're looking at winner take most in autonomous taxi platforms. The company to get people from point A to point B the fastest and the safest is probably going to win the lion's share of the market. That company is Tesla, and it is because of its proprietary data. And no one comes close. You can add the data that everyone vying for this space has, pull it all together, and Tesla still has orders of magnitudes more data more. And I would say, just in terms of this focus on data, it's very interesting what Elon Musk is doing here. Data is the secret sauce when it comes to the winners in AI, proprietary data. And think about the proprietary data out of Tesla, X, SpaceX, and we think that XAI is going to have and even Neuralink, so the multiomics data, highly differentiated data. So we're paying very close attention there. But if you look at the biggest opportunity short term around AI, Tesla is the largest AI project in the world. We think autonomous taxi platforms globally, including China, the platform opportunity is a $4 to $5 trillion revenue opportunity in the next 5 to 10 years. And it is going to be winner take most.
Okay.
And on the other hand, you've got NVIDIA, where you do understand the valuation. People are still questioning it, Mike.
Well, yeah, I mean, so on the valuation on OpenAI, I mean, the number that was getting bandied about was just under 160 billion. And is it believable that it could be worth that or a higher number? I think so. I mean, it's some of the rivals opportunities. Now, that's not really a public markets conversation. I wasn't so crazy about the reported comments that Sam Altman was making that, he only wanted people that invested in OpenAI to back them and them alone and not their rivals. That seems like a rather dangerous situation to have only one supported AI company. But look, I mean, NVIDIA at the moment still has the demand for their products. And, if there's going to be support for companies like OpenAI and their rivals, then that means there's going to be continued demand for the products that essentially are doing all the churning on this. And so also that supports VST, by the way, which you were talking about earlier.
Mm-hmm. And it also sounds like, this is almost like buying an ETF. When you own NVIDIA, they're going to own pieces of all of these AI companies to a certain extent. So I'd rather, but you're going to get a muted position, just like in an ETF. You get a small percentage of it. But if NVIDIA, to Mike's point, is still king of the hill, you're going to get fractions of ownership on a lot of these. And when they start proving themselves, then you could buy the specific companies that are successful.
All right, I hope you're all doing well and having a great weekend. I'm going to recap most of what I said in yesterday's video in case you missed it, because not much has changed since then. So yesterday, the S&P finished the day up 0.9%. NVIDIA finished the day up nearly 1.7%, and Tesla finished the day up 3.9%. The entire market breathed a sigh of relief yesterday after news that the port strikes have ended until January and news of a stronger than expected jobs report. While the port strikes coming to an end is great news for the entire market, it is especially great news for Tesla. As I've been saying for a while now, if Tesla trades lower following delivery numbers, then I expect the stock to find a bottom and then trade higher from that bottom the closer that we get to October 10th. Have we already reached the bottom? I don't know, but I hope so. Considering that the Robotaxi event is this coming Thursday, I think the bullish price action in Tesla stock should be strong next week, as long as nothing unexpected is happening at that time. As many of you know, I am currently in a Tesla swing trade, and I hope to sell this position sometime next week. I think the Robotaxi event may turn out to be a buy the rumor, sell the news type of event, and so I am riding the momentum right now, and I will likely exit most of my position prior to when the actual event starts just in case. I want to be completely honest with you all. all, and so that is what I intend to do with my position. Now about NVIDIA. I am bullish on the long-term future of NVIDIA, and I think NVIDIA's brightest days are ahead. But I am cautious about adding to NVIDIA and cautious about adding to the rest of the market between now and November 1st for multiple reasons. Back in 2016 and 2020, the market began trading lower in mid to late October, reaching a relative low on the Friday before the election. This year, that would be November 1st. Additionally, NVIDIA tends to move in cycles in between earnings reports. Prior to NVIDIA's last two earnings reports, the stock reached a relative low 3 to 5 weeks prior to the upcoming earnings reports. If this cycle were to repeat itself, then we could see NVIDIA experience softening price action lasting until sometime in late October/early November. So given the pattern the market followed during the last two election cycles, and given NVIDIA's typical cycle in between earnings, I am cautious about adding to NVIDIA until November 1st. Once we get to the actual week of the election, I think it is likely for NVIDIA and the rest of the market to start trading higher, as long as nothing unexpected is happening in the world at that time. I think NVIDIA is likely to trade higher starting in early November in anticipation of the company's next earnings report. I think this is especially likely given Micron's great earnings last week, and because Blackwell revenue should start to show up in NVIDIA's next quarter guidance. So far, NVIDIA has said they expect several billion dollars of Blackwell revenue in Q4. Several means more than two, but not many. So let's just say NVIDIA is expecting $3 to $4 billion of Blackwell revenue in Q4. With this in mind, if NVIDIA guides Q4 Blackwell revenue noticeably higher than $3 to $4 billion, then I think the stock likely trades higher on that news. It all comes down to Blackwell, and market participants are laser focused on Blackwell right now. I think the price action that we've seen the last couple of days is proof of that. Back when Jensen spoke at Goldman Sachs' recent technology conference and said that demand for Blackwell was strong, the stock rallied. And a few days ago, after Jensen said that demand for Blackwell is insane, the stock rallied. So that is something to keep in mind in the future if you're trading NVIDIA stock. Right now, it all comes down to Blackwell, and that is what market participants are focused on. Looking ahead from a long-term perspective, I am bullish on the future of NVIDIA, and I seriously would not be surprised if this company doubles over the next 2 years, given NVIDIA's current growth trajectory and upcoming product cycles. Demand for NVIDIA's products is so extremely strong as the largest companies in the world are practically waiting at NVIDIA's doorstep for the latest generation of their product. As long as things remain peaceful in the Pacific, and as long as none of the hyperscalers significantly reduce their capex spending, then I think NVIDIA should be just fine for at least the next 1 to 2 years. At least that's how I view the situation. With all of that being said, I hope you all have a great weekend, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.